Matthew, the money question is the banks come out of the bottom and they regress back to a mean, or can there be a golden age out there where they go through the mean and onto prosperity? Which is it?
Thanks for having me. And we are still quite bullish on the banks. And really, it's the same reasons since we upgraded the group in early September. And it's a pretty simple story. They've lagged the market quite a bit, even with the recent run since the crisis. Macro conditions are going to improve throughout this year, driving interest rates and loans higher. And the concerns about long-term earnings power being significantly impaired, we think, are overblown. And you put that all together, and we still see room for the banks to run.
Matthew, Charles Peabody, the wonderful analyst in your area of crime, has been brilliant on the use of cash by the banks. Do you start January of this year understanding that the banks have so much cash they're going to use it to give to shareholders?
Well, we did get some good news from the Fed in December, allowing the banks to start resuming buybacks this quarter. It'll be at a measured pace. About 1% of outstanding will be the capacity for most banks, but it's moving in the right direction. The banks have a lot of capital. The banks generate a lot of capital, and we do expect buybacks to accelerate throughout this year.
So we're going to be getting JPMorgan fourth quarter earnings tomorrow. That will be the first kickoff, followed by Citigroup and Wells Fargo. They all have slightly different stories. I'm looking at JPMorgan shares up 40% since the beginning of November. Matt, what are investors looking for to go further from here? What are the key metrics that you're watching?
So everybody knows that capital market revenues like trading and investment banking fees are going to be strong in 4Q, and the outlook seems positive. I think the real key is net interest income. Even for the big diversified banks, it's still over half of total revenue. And this is driven by, as I mentioned before, interest rates and loans. And the outlook for that is really, I think, what investors are looking for to have sustained gains in the group. We do think net interest income is bottoming this quarter, and we hope the banks will be cautiously optimistic in their outlook throughout 21.
Can banks continue to rally if yields don't continue to rise?
Well, it's certainly possible you get a little bit of a pause in the very near term here, but I'm in the camp that the longer end will move higher as macro conditions improve. We've been assuming the 10-year averages between 125 and 150 in the back half this year, and that's high enough to support further gains in the banks.
Matt, when we look at the banks, we talk about the consolidation, we talk about the business plan. I noticed the wealth management activity yesterday with Corbett Fraser over at Citigroup. Great. What is their greater strategy, to consolidate and be simple, or are they going to get creative in their new prosperity?
Yeah, it's a good question. There's two what we would call special situation stories out there, Citi and Wells Fargo. And, the market cap of these two companies is very big, and they can't be ignored. We strongly prefer Wells Fargo over Citi.
Why?
Because we do think there's a lot of questions to be answered at Citi. Our estimates are well below consensus for next year at Citigroup. We do think there's going to be some exiting of certain businesses. We do think there's going to be some simplification of the customer base, and we think that's going to reduce earnings more than expected.